Okay, so today we have a lot to talk about. Bitcoin has had a monumental increase in price, which we love to see. And there were so many trades, so many good trades you could have entered. But we'll quickly talk through the ones we caught and the ones we could have caught. But first things first, big shout out to everyone who has followed recently. Let me just take a look at what that looks like quickly. So big shout out to Fanny91. Big shout out to Husky Trader 16. Big shout out to I'm not Farhan. I'm gonna stop there so I don't butcher your name, man. Big shout out to Evolving Star, and it's good. It's really good that this is growing day by day, week by week. So remember to hit the boost, hit the follow, and make sure you are taking these trades. Basically, free money out here. All right. So let's talk about Bitcoin and let's see where and what Bitcoin's been up to. All right. There were pretty nice setups we had over the weekend. Um, Sunday is usually when we get that big move, isn't it? For those of you who are here every single week, Sunday is usually the day of reckoning when we get that monumental increase. And I believe this Sunday was no different. We'll check that out as well, see what happened. But before we do so, let's just have a quick recap and talk about, what trades we gave in advance and what we were looking out for as far as the trades go. So what was going on here? Okay, so this we've kind of played this out. I'm not sure if we've already spoken about this. Well, it looks like we may not. I think we have. I think we have. So we came down here. We reacted off of this 10-minute zone. The zone we were, obviously prepared for. Flipped market structure bullishly here, and have just been in a nice uptrend since. Okay. Now after that, we had this setup. So congrats if you took the last trade. Bloody bloody blah. Now we've got this setup. And for this setup, we said to ourselves, well, we had this range, we broke from the range, we're due for retracement and a continuation. That's exactly what we got. We got a nice retracement. We got a continuation. However, the retracement was kind of a shallow retracement, wasn't it? It didn't come quite as deep as we thought it was going to come. But if you remember last video or last lesson, we said a reaction from the old extreme is definitely something to watch out for. And that's exactly what happened here. We had a flipping market structure here, came up to this 1 hour supply, had a bit of a reaction from the 1 hour supply, and we'll have to check this in a second, but I think we got 10 minute flipping structure here. But we shortly got a flip in the other direction not long after. Excuse me, sorry about that. All right, so let's see. Let's see what we could have got into. Yes, we can use that, but let's just use the actual price action. All right, let's go straight into the price action. Let's see what's been up. Let's see what's been up. So we're gonna start. We're gonna assume we got the flipping market structure. We got the retracement here. Okay, so we're gonna start our analysis today from, let's say, around here. Okay. Now remember what I tell you. Remember what I tell you guys every single day. When you have that flipping structure and you miss that first flip, that's okay. All right. Don't ever feel like you're out of the trade just because you missed the first flip. You can simply follow your chain all the way down if you know where price is headed. But you have to know where price is headed. Our range came like this. We had a low high, low, low high. And then I'm going to draw this internal structure here, a series of lower lows and lower highs. All right. We had a flip there, breaking structure, retracement. We came back up and we came here. All right. So right here, we're looking for that continuation play up. But because we flipped market structure here, guess what? The target for this trade now became all the way up there. Okay. Because we flipped structure there, this became the target for our trade. All right. Now, if you don't understand that, you won't quite know that entering a long here is okay. Entering a long here is okay. In fact, entering a long here is okay. Entering a long here might be a little bit risky. Why? Because you're so close to this point and you've got this zone, this 1 hour supply zone in front of us. So once you realize that, you're not too frightened to enter along, even when the move has commenced. So what we're going to see here is if we drop down to the 15-minute, let's just see how many trades we could have entered on the way up to this zone. So if we follow the structure on the way up, look at these trades. Look how nicely they are coming back to these zones. All right. So if I draw the structure here, just on the rise up from the low to the high, high, low, high, low, high, low, high, low, high. Okay. Now, I'm gonna mention this in a second, but let's just draw this out. Okay. So what I'm trying to get you guys to understand here, for those of you I teach one-to-one, you kind of have a good grasp of this already because I make sure I drum this into your heads. But what I really want to get you lot to understand here is that what have I done? Okay, cool. It is recording. It is recording. I was about to say, I was about to lose it. Okay. Anyways, we'll start afresh here. So what I wanted to get what I want to get you guys to understand here is that um these small trays, all right, they can be really profitable as well. These continuation plays can be really profitable as well. All right. So as we're breaking structure on the way up, it's fine. We can see we had our first break of structure here. We can see we had another break of structure here. We can see we had another break of structure here. We can see as well we had another break of structure here. So what can you see? We have this continuing break of structures, but it means you can easily enter along at these lower time frames. All right. So many ways you can do it. One way you can do it is you look for a demand zone on the way up. Look for a demand zone before breaking structure. Enter along, stop loss, perhaps at the prior low, and then look to ride that up. Simple as 6x just on that trade. All right. Now, let's say you missed that chain. Let's say you entered on this chain. Okay. That even gave you a tighter risk to reward. All right. Let's say you only targeted to this high here. Okay. There, 9x. All right. That's 9% of your trading account. Let's say you're doing a funded challenge. What the funded challenge these days, what do they require? They require 10%, right? 10% phase one, 5% phase two. So that's your funded account or your funded challenge pretty much done in one or two trades. All right. So if you do want to pass your funded challenge, this is the way to trade, and this is how you do it. All right. So here you go. Again, you could have just followed that one up. All right, gave you a 7x. All right. Maybe you missed that one. You could have followed this one up. Okay. Okay, maybe a 4x. Now the closer and closer you get to this point, all right, at what point am I talking about? I'm talking about this point here. The closer and closer you get there, you might be rethinking, okay, do I really want to enter along here? Why? Because we could obviously get a rotation there. But until you get there, there's no reason why you can't long this, scoop that up, and scoop that up. Like easy money, free money. You're looking, let's say you're risking 1K per trade. Yeah, let's say you're trading on a 100K account, you're risking 1K per trade, right? This is a simple 7K trade, 8K trade, 9K trade, 10K trade. All right. And this is happening within less than 4 or 5 hours. Okay, so brilliant way to trade, in my opinion. That's why I highly recommend you understand market structure. If you want to do so, let me know. All right, so what we also want to be aware of is that as we came up here, we had this cascade of bull trends and bull breaking structures, but then price started to reduce here, started to range. Now, when it starts to range, price told you it was about to range. Why did price tell you it was about to range? Well, let's look at the amplitude in breaking structure. This breaking structure was about $500. This breaking structure from this high to this high was about $500 again. Okay. This breaking structure to this high was about, $300. Okay. So potential reduction. And then we had this whopping breaking structure here. All right. This gave us $1,000 move, followed by another breaking structure, all right, which gave us about about $500 move, and then the next break of structure we got was a drastic drop. And what I mean by drastic drop is the next boss is only a $241 move. You can't really see these digits, but $241 move. Maybe I should change the color, style. Actually, I should make that black. Okay. Okay, so you can see there, $241 move. All right. That is a sign. I'm going to make that as my default as well. Default bear, save as default bear. Yeah, that one. Okay. All right, cool. So not just that, and then the next time we don't even break structure, we wick it. So what is that telling you? For those of you I teach 1-to-1, what is that telling you? What is that telling you? That is telling you a range is about to beckon. A range is about to beckon. And shortly after, we get a range. Okay. We get a nice little range. So we'll get rid of all of that. All right. And shortly after, guess what happens? We have a range. So what do we do when we see a range? Well, we pull out a range. That's not a range. We pull our range. Well, this is our range high. This is our range low. And then we just say, cool, this is our range. All right. And as this is our range, all right, range from an uptrend, we have broken structure here and we're so close to this supply zone. Does it make sense for price to retrace now down here, even though the target is all the way up there? It doesn't really make sense, right? So what price did? It gathered a bit of strength, reduced, spent some time relaxing, and then bang, it came back up for this zone. Now, a lot of you would have been looking. Someone's playing some good old fashioned burner boy. All right, so some of you might have been looking to say, okay, TJ, on this uptrend, if we've got high low, high low, high, I just want to catch the next high low, all right, for continuation. Now, market structure played a little trick on you here, and it did, and it's okay. It does this, and what I mean by that is, for those of you who were looking to do that, you would have been looking at structure like this. Your internal structure is, low, high, low, low. Um, do, 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 do. Okay, let's see. Let's see if that actually works. Okay, cool. So you're looking at this low high, and then you'd have had another low low all the way down here. Okay, so no break of structure yet bullishly. Then a low high, then a low low, then a flip in market structure here. This is a flip. This is a break of structure, and a break took place right there. Okay, so now after this break, I'm sure 99.99999% of traders were looking for a high low for a higher high. All right. And Bitcoin decided, actually, I've got other plans. What I'm going to do is I'm going to come all the way down, stopping these guys out. Whoever got in really early, they're out. Sorry, bye. Okay. And then I'm going to go up. Okay. So it's a bit cheeky. It does that sometimes. Let's see. Is there a way we could have avoided that? It would have been quite tough. It would have been quite tough because even on the 13-minute, it's still a break on the 13-minute. Yeah, it would have been a tough one. It would have been a tough one, and that happens. That's just a 1x loss. That's all it is. If you're calculating your risk manager your position size properly, that's just a 1x loss. We're gonna make that back. Watch. So what happens then is, all right. So after that, we have made a tap number 1 at the low, tap number 2 at the low, and essentially it comes back for a 3-tap model. Okay, and usually this third tap ideally happens a little bit higher. Okay, ideally that sort of takes place, but Bitcoin had other plans here, and it does what it wants. So hey, what can you do? All right. So if you were looking at these as 1, 2, 3 taps, basically a triple. How would we call this? Let's coin this phenomena. We'll call it a triple bottom bull flag. Yeah, it's a triple bottom bull flag. All right, where we've got your bull, you got your flag, and it gets 1, 2, 3. Triple bottom bull flag. That's what we're gonna call that. All right. So now it did come from that third tap, but it did give you a sign to enter the trade. It did give you a sign to say, hey, I'm going up now. How do you do that? If we look at this expansion leg, we've got low, 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 high. We've got okay, it did it again. It did do it again. All right, we're going to check that in a second. Low, 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 high, low, 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 high, low, low. All right. So for those of you trading Bitcoin on Sunday, some of you would have been fuming, especially on a lower time frame, because we got 2 fake moves. We got 1 false move there and another false move here. All right. Did this false move? Okay, so I guess if you're trading it on a higher time frame, if you're trading it anything lower than a 15-minute, you'd have got wrecked at least twice. All right, but if you're trading it on a 30-minute, you'd have only got wrecked once. That's here why? Because your 30-minute structure looks like this, has a low high, low low. This comes all the way down. All right. before it flips structure. So we don't really get a break here. This pull is one structure point. All right, this is one whole pull all the way down from top down here. All right, so that means our flipping structure actually takes place right around here. Okay, but it takes a while before it breaks because, for those of you I teach, you know this is not a valid break. All right, for reasons I'm not gonna say right now. Okay, the break actually took place here. All right, so after you've seen that break, you say, right, all right, second attempt. We've got a flipping market structure now. Then we're gonna look to get in that retracement for that continuation up. Now, if you did do that, congratulations, well done. You netted a really juicy profit. All right, let's see how juicy that was. We would have had to cover this low, in my opinion. Okay. And so let's say you're still in that trade, Forex. Okay. So you just made 4% on your account. Not bad. Not bad at all. Again, 1K, you just made 4K. You risked £100, you just made £400. Okay. So really good trade there. Really good trade there. Um, an obvious trade as well. However, I can see why you may have been a bit hesitant here because of that initial false play. So you may have been hesitant, but hey, it's part of the game. All right, next. Next, you could have actually looked at this as an internal range. So if we go down to the lower time frame, and I'm just going to show you this. I wouldn't usually show this because it's not classic market structure. This is more range play. But if we drop down to a lower time frame, all right, we could have actually treated this play as a range. Okay. Now, what do I mean by that? Obviously, we have price coming down, and where is our range? Well, our range would be from this low to that high. Okay, and what you would say then is you would say, if this is my range, okay, therefore this dip down, this aggressive move down, and you have to ask yourself as well, why did it dip down? The reason it dipped down is probably most likely to collect some demand that was hidden here. We're not going to check right now, but if you have time, take a look. So you could treat this as it's kind of pushing it here, but you could actually treat this as this leg as your initial accumulation, or your PO3, your accumulation. You could treat this leg as your manipulation, because that's all it was, a manipulation of shorts. And then this leg that we see after is a very aggressive expansion. Okay, so the reason why I'll be honest with you. I'm not here to lead you the wrong way, and I'm not here to teach you the wrong thing. That it's a stretch. That is a stretch. The reason that is a stretch is because this break of structure here was quite an aggressive one. All right, so I can imagine if you weren't inclined to treat that as a range, I can understand that. All right. But anyway, so price comes back now. It breaks structure from this range that we have here. So it breaks out of this range. Now, at this point, I think this was this morning. This was this morning before I left the house to go to the gym. I said to myself, all right, why don't I give you guys a little trade entry so you can start the day right, start the day with a winning trade. All right. So I think I put this on Discord as well. So for those of you who are not on Discord, um, that's the place to be, because that's where I would usually put live ideas and live discussions. So I put it on Discord as well. I said, hey, looking to chase this uptrend to the range high, I'm eyeing up a continuation setup. My confirmation will be a clear market structure change from bearish to bullish. All right, so this is our range. I mapped out these two zones as the key zones to look out for. Now, we did miss those zones. We did actually miss the zone, but we just missed it. We just missed it. Look at that. Look at that. We just missed that. I almost just missed my alert. Look, my alert was there, and we just missed that alert. And that happens. It really does happen. Now, of course, if you were looking at the chart at the time of occurrence, yeah, you may have actually capitalized off of that trade and entered on that play. But it was a very simple one. It was obviously broke bullishly from this range, as we can see. All right, so if we say we've broke bullishly from this range, what do we expect after a range break? Well, after a range break, we'll go to the whiteboard. For those of you who are beginners, let's say this is your range. Whenever you have a range and you are coming out, let's say go to the top, you form your range, you come back to the bottom. As soon as you break out of this range, the expectation of order flow, the expected flow of orders is a retracement for a further continuation. All right. We're looking to catch that retracement. That's all we were looking to do. That retracement was this leg here. Okay, so price came down. That would have been a nice long entry, all the way up there. However, all right, it didn't quite come into our zone. I was looking for it to come to that exact zone before I looked at it. Why? Because that was a nice, juicy confluent area for me. But regardless, it didn't come to that zone, so I didn't enter that trade. All right, and it happens. Okay, so now let's see. Could you have capitalized if you did not get the alert of that zone, but you entered purely based off of market structure? All right. Now, I'll be honest with you. Again, Bitcoin's been doing a lot of these fake plays lately, especially on the 5/10 minute. So just be careful using the 5/10 minute as your confirmation. Why? Because if you're entering this on the 5 minute, um, well, you may not have wanted to do that actually, because your structure going up suggests that you shouldn't. But you might want to actually go on a higher time frame there. Okay, that's maybe the 15. Yeah. Let me just check something really quickly, guys. 1 second. Yeah. Okay, so we can use this. So we'll go over the 10. All right. So as far as the 10-minute structure goes, we had a bit of a false play on the way down. So we have low, 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 high, low, 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 high, low, 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 high, low, low. We have a breaking structure. All right. Expectation of order flow is what? Is for high, low for a continuation. However, this higher low, it dipped a bit too. It dipped quite far down, didn't it? So what happened here is that you actually formed what you call a minor range. You formed a minor range here and you deviated the range low. So that's what happened. So if you were looking to play this one, you can't have really caught. You really can't have played it. I don't know if that's proper English, but you can't have caught this. That just sounds wrong. But you might not have been able to catch this. It can't have caught. You can't have caught. You might not have been able to catch it unless you dropped to even on a 2 minute time frame. That's difficult. Why? Because you need to see that level loss before you justify that trade. Okay. Let's see on a 1 minute. Did we get any structure on a 1 minute? Not necessarily. Okay, on a 1 minute, that needs to go. All right. So now let's say you enter this on a 1 minute, which I advise you not to do, because you are beginner traders. I don't want you to, play and lose your money in a 1 minute. But let's say you did enter on a 1 minute. Now, this was such an aggressive move. It was such an aggressive move that you might not been able to catch it. Why? Because the candle close, on that break on the 10 minute is all the way. Okay, this is a 10 minute. Is all the way up there. All the way up there. What's that risk reward like? Is it worth it? I don't think so. Especially when you're so close to supply. Right? What about the 3 minute? If you entered on the 3 minute, well, okay on the 3 minute. It might have been a bit more feasible because your close happens, right about there, giving you a 2.6x. Okay, what about a 2 minute? Do you get a 2 minute close before? Not necessarily. All right, what about a 1 minute? Now, surely a 1 minute should give us better risk reward. Surely, surely, surely. Okay, but on the 1 minute, yep. So on a 1 minute, if you were entering base off of a close, you would have had maybe your 4x on that one. Okay, but risky, risky, risky. But the issue with this is we didn't really get a retracement. We didn't really get a retracement. So if you were the patient trader B or patient trader 2, you're still waiting. You're still waiting for that retracement, okay? That's kind of what's transpired so far. All right. So what we're going to do now is talk about what the targets are. Remember what I said? The target for this trade, all the way from down here, which we're waiting for, is up there. Okay. So we're looking to head back to that $107,000 level. All right. We have obviously just broken bullishly from this range. All right. So what I would like to see in an ideal world, and the world isn't always ideal, is a nice deep retracement, okay, for a nice continuation up. That is what I would like to see. Whether that's what we're gonna get, I'm not entirely sure. Okay, but let's plan the next trade. Where is the next trade coming from? In my opinion, we've obviously lost this zone already, so that 30-minute zone can go. Although we do have this 4 hour zone, and it looks like we're getting some resistance, okay? Some resistance. So it could be a situation where we actually accumulate here for a bit, or distribute here for a bit to drop, or we accumulate to go further up again. But you also have to be aware that this is your 4 hour last lower high. So if you're looking at your 4 hour structure, okay, it's no longer your 4 hour low high. Why? Because we tapped this low. So your structure now on the 4 hour looks like this. It looks like a low, it looks like a high, it looks like a low, and it looks like a break of structure. Okay, so this is what your 4 hour structure looks like. I'll make it nice and thick. So what do we expect now on a 4 hour? Well, we expect a retracement for a continuation. So the purpose of today now is to say, okay, if we are getting that retracement, where is it likely to come from? All right, so that retracement can come deep. Actually, you'd be surprised. That retracement can actually come all the way down here if we wanted to. All right, and that will still be valid. Okay, but we're going to play it by eye and see how we get on. Now, let's just quickly. Now, by the way, if we do get a confirmation here, I'm going to short this supply zone because this is a 4 hour supply zone. So, my immediate thought is if we do get a trade here, I'm in. I'm in because this is a supply zone. I'm going to be watching, and it's a range that's developed as well. I'm going to be watching to see if we're going to sweep that range high over here. If we sweep that range high with market structure change and a confirmation, I am in that trade 100,000%. I've missed quite a lot of trades recently, and it's kind of starting to get a bit frustrating. So if we get a flip there, I would definitely be in. I'm also looking at this line here at 102,857 as well. Okay, so that will be my first short. All right, and I'll be looking to take that all the way down. Look at these fair value gaps. Now we can run that very quickly, but I won't. I'll just leave that there as it is. All right. Now there is a chance that we don't quite come to this high, and we come close to it and then flip structure. But if that is the case, then you want to see this level loss first before you even look to get an early short in there if you are looking to short it. But be careful here because this is internal structure. This is internal structure. As far as my longs, well, if I'm shorting the range higher, why not long the range low? Okay. Okay, but if I'm entering this long, I would like to enter this long, prior to seeing the high taken. I would rather enter this long on a double bottom bull flag rather than, an SFP of the top. So what I mean by that is if price does this, it doesn't touch the top, it comes back down again, and then it heads up, that will be a better entry for myself. Okay, no. All right, so those are my two trades as far as current price action. But as far as this retracement, let's spend the next 2 minutes finding out where it could be. So the first key zone to enter along for that retracement, really and truly, is this entire zone. This entire zone. This is the last bit of support, okay, before that massive move. So that is a key zone to watch out for that retracement. So maybe price comes back and does something like this. Okay. Now, the next zone to look out for, assuming we burst down from this zone, I think this will still be valid. So I will extend that across. All right, that would still be valid. Now, the moment we start closing below this level, all right, if we start closing below this level, it gets a bit tricky now because if we had to close below this level, the reason it gets tricky is that we would officially have broken structure, and we would have broken structure here. And if we break structure there, we may be in for a deeper retracement, perhaps, before we rotate up. Okay, so ideally, the best case scenario for a long trade right now, is for us to come back into this box and not necessarily break structure. Okay, but if we do break structure, then we're looking at these zones for more of a continuation play. All right, so that's kind of, I'm going to leave it there today because I want to make sure I'm under 30 minutes. Otherwise, TradingView will force me to re-record this. So that's what I'm going to do here. I'm going to leave a play there, and I will tidy this up and I will post this for yourselves. But don't forget, if you do want to stay in the loop, stay on top of the curve, make sure you are on Discord. Make sure you find the link. It's in the signature part of each and every post. And remember to add YouTube and keep an eye out for the notifications on your emails. Otherwise, have a great day, and I will see you next time.